Be Wealthy and Smart, episode 1557.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about interest rates and inflation improving. Now, that's some powerful economic news because these two things are very important for the economy. Yesterday, we had the latest producer price index reading, which showed that wholesale prices fell 0.1% in August. Economists were expecting a 0.3% gain. We also had core PPI, which excludes food and energy prices, declined by 0.1%, while the consensus again called for 0.3% inflation. So what we see is this is a positive sign regarding the state of inflation in the U.S. economy heading into tomorrow's more important, in some ways, consumer price index reading. Economists are expecting that reading at 0.3%, according to Dow Jones. That includes the headline index as well as the core reading that excludes volatile food and energy prices. If we get that reading of 0.3%, then the CPI rate would be pushed up to 2.9% and the core reading would be unchanged at 3.1%. So we'll see what happens tomorrow. But if the numbers come in around these estimates, the Fed will have more ammunition to deliver a rate cut at its September meeting. Currently, the CME FedWatch tool shows that traders believe the Fed will cut by at least a quarter point, and there's some that believe it will be a half-point cut. Sam Stovall from CFRA Research said, with the PPI surprising to the downside, with the employment data showing much greater softness than anticipated, that basically says that there could be a reason for the Fed to cut by 50 basis points, or 0.5%. What they want to do is to ensure that they are not going to be too slow, as the president describes Fed Chair Powell, and that they do at least keep up with or get ahead of the overall weakening trend. That could, I think, certainly light a fire under the market between now and the end of the year. Well, I agree with Sam that we are going to have a rocking fourth quarter, but I think prior to that, we are going to have this lift up here and then a dip before we get that boost in October into January. Any gains here would be a good time to take some profits and prepare some cash for potential buying the dip later in September. Meanwhile, the S&P 500 has jumped to a new record, with stocks trading this morning at a new high. And the Nasdaq also reached a new record, but the Dow fell slightly short. A lot of the gains in the S&P 500 can be attributed to Oracle, whose shares jumped more than 40% following a huge forecast tied to artificial intelligence. Yeah, we're continuing to see artificial intelligence drive the value in this market and create huge increases for just a handful of companies. The other big news is a sharp drop in mortgage interest rates, which got homeowners to apply for more mortgages. Total mortgage application volume jumped 9.2% last week compared with the previous week, according to the Mortgage Bankers Association seasonally adjusted index. The average contract interest rate for 30-year fixed-rate mortgages with conforming loan balances of $806,500 or less decreased from 6.64% to 6.49%. Joel Kahn, an MBA economist, said mortgage rates declined for the second consecutive week as Treasury yields moved lower on data indicating that the labor market is weakening. The downward rate movement spurred the strongest week of borrower demand since 2022, with both purchase and refinance applications moving higher. Applications to refinance a home jumped 12% for the week and were 34% higher than the same week a year ago. Refinances jumped from 46.9% of applications to 48.8% of total mortgage applications. The 30-year fixed-rate mortgage is still 0.2% higher than it was a year ago, but it's considerably lower than it was at the start of the year, as well as in May, which was the height of the spring home buying season. Applications for a mortgage to purchase a home rose 7% for the week and were 23% higher than the same week 1 year ago. This is the highest level since July. So it looks like the mortgage market is picking up, the housing market is picking up, homes are selling, and we still don't have a lot of inventory available, although there is more than has been available in the past few years. So there you have it, interest rates and inflation looking better. When we get the report tomorrow, that will give us more clarity about inflation and could solidify the Fed making either 0.25% or possibly even a 0.5% interest rate cut. Remember, the jobs being revised 911,000 lower than they were a year ago gives us a much weaker job market picture than we previously had, and that gives the Fed more room to cut rates. We'll see what happens and report back to you on the outcome. If you haven't yet subscribed to Be Wealthy and Smart, hit the subscribe button and you'll be notified as soon as new podcasts are available. And all my podcasts are on my website at lindapjones.com/podcasts. And while you're there, sign up for my weekly newsletter for more wealth tips for your financial freedom. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.